Commissioners, January 28, 2019 to order, and Ken's going to do our invocation to the office.
Lord, we're about to start on a new adventure as a new hospital district. We're not as new a hospital district, but it's a new issue here. And Lord, we just ask that you be with us and let us direct us and guide us through all your needs, and let us meet the needs of the public as we go through this. It's in your son's name we ask. Amen.
Amen. Thank you, Ken. December financial report. I'm going to have Shelley is going to give the financial report. She's going to give, I guess, some information to you, but mostly it's that, remember, from December, when December 1, when the new, when GCH took over the hospital, they've been working through December to try to get this to where the hospital district is separate, and I think we're doing a pretty good job. She's going to show you. It's not quite finished up there yet, but come on up and tell us about the December financials. Oh, minutes? Oh, I didn't even see that over there. Yeah, I got that on the prayer, First, before we do that, let's approve the minutes of December 17th. Do I have a motion to approve them? If everyone's had a chance to look at those, I guess there have been a change because the old one got in there, but have you had a chance to look at that? I'll entertain a motion for that. To be approved.
I'll make the motion.
Okay, Shane and Ken second. Any further discussion on that? All in favor, say aye.
Aye.
Okay. Opposed, same sign. So now we've got the meeting, now the financial. Shelley.
This is in your book, right? Yes, ma'am.
Yes.
Okay, I'm just going to briefly go through it. You can see the tax subsidy revenue is a true up. We get additional information.
Just move that podium where you won't be in that light.
There we go. Is a true up on any of the delinquent taxes. We get an update from them every month, and we kind of book to what the county gives us. So there was an additional $42,000 of income for that. Other revenue was the hospital lease and the Lake Kiowa property, so that was $55,000. Expenses, purchase services is $60,000 of attorney's fees and $5,000 of the audit fees for the district. And then repairs and maintenance and utilities all relate to the Lake Kiowa property. Depreciation and amortization, the district retained all the assets, so they have all the depreciation that will still come through to them. That leaves an operating margin of $118,000 loss. Then there was additional interest expense on the bond refinancing. And other non-operating, there was $451,000 of an IGT made, which is the indigent piece of funding for GCH to get the state uncompensated care match. For additional operating expenses of $2,158,000. That leaves a net margin of $2,277,000. If you add back depreciation and interest, that gives you an EBITDA of an earnings before interest and depreciation of a loss of $415,000.
Shelley, before you go further, would you explain to the board here some of those numbers up there, like one-shot deal, or what are the things
Well,
that
I
you're
think the
going
interest
through?
expense has to do with the refinancing of the bonds, and so that's going to be a one-time thing.
That's the, is that the one,
That's the very bottom number, the $1,000,007.
the $1,000,007? Mhm.
Yes. The $150,000 is going to be a monthly occurrence for whatever the depreciation is for anything that's not fully depreciated. It is a non-cash flow item, though. It doesn't take any cash out of the bank. Just brings down the balance of the assets on the balance sheet. The other non-operating, the $451,000 IGT, is related to the UC, and that is going to happen periodically. We had one in December, there's one in January, and there'll be one in February. And I think the next one after that would be in September.
There, we're missing a revenue, are we not, here, the rent from GCA?
It's
Is
in the revenue at the very top, it's in the
That's all together
$55,000.
with
Yeah,
everything? Okay.
I think Lake Kiowa was $5,000 and
Okay,
something, and then the
gotcha.
$50,000
I
for
was
the
kind of
hospital.
hoping Lake Kiowa was $55,000.
No, it's only about $5.
Hey,
It's not for sale.
Sorry.
Yeah, it's not for sale.
Maybe you could go back and renegotiate that.
Well, I think,
What was that?
isn't that interesting? Because we probably always will be, according to these accounting procedures, unless we do something different.
Well,
maybe we can get some.
Well, part of the issue is that all your tax money, and I think this was per BKD, they accrued in November. So we're just getting little trickles of changes. But going forward, what they've asked us to do starting in January is start accruing. So my assumption is taxes are collected after the fact, and you actually start earning in January for the next year. So we'll start accruing 1/12 of the taxes that we estimate for the next year.
Okay.
Will come in, so it won't always look that way.
Okay.
Yeah.
We just want to be able to understand it, you know, and make sure the board really understands what all of that is.
Yes.
And is there, you know, before you go any further though, is there, because I know this is something that it's evolving, you know, and I know it'll get better every month, but is there any of the board members have any further questions on what she's broken down there, like in purchase services and that depreciation and amortization? Tell us why that we keep the depreciation.
You still own the assets,
Yeah.
and we lease them, so therefore you keep all the fixed assets on your books.
So all of what we do lease to GCH, we still have where we depreciate.
Still get the benefit.
So we have to understand that.
Yes.
Let's go back to the other revenue.
Mhm.
You were speaking so fast, I didn't catch all of that. What's the 55,000 for?
50,000 for GCH leasing the hospital, and then the other 5,000 is the Lake Kiowa building that you own.
Okay, now
And-
50,000, you're saying GCH released in the building? I
Mhm.
thought we was doing 600,000.
A year,
Per year.
50,000
It
a
is.
month, so it's
50,000
due on the first of
Times
each
12.
month.
Okay, so we're getting it up to 50,000 a month. Question, where is that money going to?
Goes, well, even to your operating
To our
account.
operating account,
Yeah,
Is where,
in our operating account,
where's our operating account?
per state.
on the,
Do we have a bank account yet?
Yes, we do.
Strictly,
Yes, we do.
strictly for?
We have the one we've always had. They got the new one.
They had to go get it.
They have the new one.
we had to go get new accounts.
You
You
got
have
that.
multiple,
Okay.
you have 4 or 5 different accounts.
Yes, we do.
Okay.
So if you go to the balance sheet, you'll see in that first line where it says cash 8,396,000, that's a summary of the 5 accounts that you have that are not restricted. And then you have the interest and sinking fund, and you have the M&O, and that's sitting in your restricted assets, which is right before the bottom line of total assets, about middle
Which
of the
page?
page. The next page, I think, is your balance sheet.
The front page or back page?
Back page.
Page.
Back page.
Okay.
Back page?
Top line's your cash account.
What's it?
So that top line is your 8,000,003, that's your unrestricted cash. And then down under restricted,
You're gonna get there.
okay, we can. This is your 8 million,
Right.
which is unrestricted.
Right.
This is your M&O and your interest and sinking fund. So that's the cash that's restricted for those payments.
Okay.
So essentially, you have $10 million in cash or better. And that's just how it's disseminated. So in those restricted account, I mean, that's kept in separate accounts so that we know it can only be used for. And that's all it will be used for. And then you can see on here, your accounts receivable went to the hospital or to GCH. I'm trying to think, I don't know what that other receivable is. And then, of course, taxes receivable, you still have 2.9 million to collect for this year that has not come in yet.
You have any idea how many people that is?
It's a little less than half. I think the accrual is like 5,000,004 or something. Well, it's more than half then if it's 5.4. I think 5.4 is what I saw that you guys booked in November. So that means we've only collected a little over 2 million. I shouldn't say we, the county. Well, the bills just went out, I want to say like November. So, and I think that it's no penalty. I think if they pay through January and then in February it starts getting interest on it, if I'm not mistaken. And given the way the tax rules have changed and everybody getting that standard deduction, if you're not going to be able to itemize, it doesn't matter to you about paying it more timely or to get it in this year. So I think that may make a difference
The
when it
tax
comes in.
deduction, you talking about Trump's tax deduction?
No, but when you itemize on your IRS form, you can itemize interest paid on your mortgage and you can itemize your taxes. But now they've made that standard deduction per person like $12,000. Well, a lot of people aren't going to be able to itemize anymore. So a lot of times they would try to get that paid by December so they could take it off in their taxes this year. Now it doesn't matter unless you're itemizing. And I wonder if you paid 2 in 1 year, if you could actually wait and itemize that year and get credit. I don't know.
You probably wouldn't give it to 12,000 off, not
Some
24.
are paying by quarters also, they're not paying all.
is true.
I'm just wondering how many people are delinquent from last year.
Oh, I think on your delinquent it was, if I can tell you that.
Christie, do you recall?
It's not a lot, it was
I
a
think
couple
it's pretty
hundred
low.
thousand, and then we reserve a little bit against it.
Collection rate's always around 98%.
I know a couple of years ago, there was 2,400 people that were late in July already.
Wow.
I'm just curious how many there is.
Well, in December, we had $119,985 as a delinquent receivable. We reserve against that based on historical percentages provided by the county, so we've reserved about $70,000 to offset that of what we don't expect that you're gonna collect. But I don't know what the timing will be on that.
Which one was indigent care on?
And if you go to the P&L, the indigent care, the IGT piece is sitting in other non-operating expense. So, oh, you're on the balance sheet.
That's right, other sheet.
Yeah, that's in the P&L.
No,
So it's this 446 that's in there.
okay, that's in there.
That's where the IGTs will flow through that we do on behalf of GCH. Then you have your capital assets of 56 million offset by accumulated depreciation of 34 million for a net property, plant, and equipment of 21,000,009. The construction in progress is a liability of 693,000. That's the insurance proceeds less the part of the roof that's been paid for that's been completed. That additional 693 will be what we expect that we need to pay out. Deferred costs related to bonds is $1,391,000. That would be the piece that we can amortize over the life of the bonds. And then restricted assets, that's where I said you're sinking, what you guys call your INS and your M&O restricted funds is sitting in that $2,353,000. The payroll-related liability sitting here has to do with the FSA. You guys have a bank account that's set aside for that. It's where the employees had money deducted so that they could pay their medical. They had payroll deductions, but they haven't turned in all the medical. They have 90 days to do that. The plan year was from July through June, but it terminated as of December 31st when we took over and set up a different plan. And then your other current liabilities and your other current 12-month debt has to do with your bonds, interest and principal. And then the balance of the bonds that's paid over 12 months or is paid out further than 12 months is the 40 million. The equity in there is when we split up the balance sheet between what you guys got and what we took, like we took all the leases. That was the 4,096,000 that's showing up in equity. The current year-to-date operating margin of 2,277,000 is December plus October and November, what your earnings are for the year so far. As I said, I think November's when all that 4.5 million or 5.4 million for property tax was booked.
This $4,096, explain that again.
That's the equity, it has to do with your retained earnings over the life of the business, less what you gave to us. So that was, you gave us your patient receivables, you gave us your long-term leases and debt, and this is the net of what's left on the balance sheet that you took, which was your bank accounts, the fixed assets, and then anything to do with the bonds.
So that 4 million is part of the 8 million that's in the bank?
No, it's really, what equity represents in a company is your earnings since the life of the organization till the point it is at today. So that's through September of 18, when you ended your fiscal year. That's the equity, that's what that represents. So at the end of this fiscal year, whatever that 2.2 million that we're showing you've made year to date, it'll roll into there and close out at the end of the year. So it would be all your years of earnings less all your years of losses. That's the net effect.
It doesn't affect your cash, Jimmy.
Yeah, I understand.
Any other questions?
Do you happen to, we're sitting here kind of putting down, do you have the 4 accounts that are under the district board Do you happen to have them on top of your head? I think we were trying to figure them out here. You know, the operating account is one.
You have a capital expansion account, a surplus deposit, insurance surplus deposit, you have an employee insurance fund, a trust account, and a medical staff fund. So 1, 2, 3, 4, 5, 6, and that doesn't count your M and O, and
And
your
the-
restricted is in another.
So four. And some of those, I think, are just sitting there that need to probably go away, don't they?
The medical staff, probably, we need to transfer that, I mean, if you tell us, I mean, if you want to do that, you could close the medical staff out. I don't know, I'm not sure what that trust account was for. Were you ever self-employed on your insurance? That's usually what a trust account is for.
Somebody emailed me a list of them accounts.
I think the insurance fund account is where that FSA still may come through, so we definitely didn't want to close that one until April.
Mhm.
I don't know on the insurance surplus deposit if that's still, it doesn't look like there's any activity, although it does say restricted. So I don't know, but I could go back and get you the information to find out.
When, and Christie, if you would send that out to. just the-
And how much is in them accounts?
Sure,
Yeah,
I can do that.
yeah, we can do that.
Total 6.
Any further questions for Shelley? Good, thank you. I know that's going to evolve, and tell us about, I know it was asked to have a revised budget for us, and,
We do have a skeleton of a budget. There's a couple questions we need to ask. One is, what do you want to budget for attorney's fees? Because it's not going to relate to what you spent last year. The other thing is, what is the audit going to cost? I would think it would be something less usually because you don't have a full hospital audit to go through, and Chris may be able to help us with that one. So those two things, and then we need to get from our side what those IGTs are going to be for a couple more months of the year. We need to
Sure.
kind of, supposedly by March, we would have what the estimate is for September.
okay.
And those are the only things we're missing at this point. Unless there's something else that you all know that's going to change, if you want to tell us, we can certainly put that in there. But the bonds, what they cost, we don't have any of that in there. We took out all attorney's fees, thinking we'll come up with an estimate of what you want going forward. And then if there's any other changes you guys know about, we can, I mean, the rest we've looked at, and we know what the history is and what we think it'll matter. Okay?
Thank you, Matt. Appreciate it. Um, And we're going to go ahead and approve the financial, if I hear a motion to approve that. Robbie, you have a second?
I'll second.
Okay. Any other discussion? All in favor, say aye. Opposed, same sign? Okay, the district website, information, I think, Jeff, you're gonna give us an update. Obviously, there it is right there.
So Christie, myself, Brian Dorr, and one other gentleman. Mel. Yeah, we met and went over the hospital website. The idea with the website was, one of the big things we want to do is just keep it simple. The information we need and not go too far into it. One of the things we wanted to do is really focus on the fact that we're a hospital district, not the hospital. So that's one of the reasons, and Brian did a great job as far as coming in and really kind of keeping it down to what we wanted to do. So the first page, we used the background of obviously the hospital, just because we're basically landlord with the hospital itself. We wanted the first page to have information specifically about what the hospital district was and include the Enabling Act. We had Kevin go through the language on this, which we wanted to make sure we had everything that we could do with it. So we wanted the first page to just be, here's what the hospital district is, here's the upcoming meetings, a link to North Texas Medical Center, and a district map.
I love that you put that map on there. That's,
Yeah, one of the things that was kind of a little bit frustrating was it was very hard to find a district map. I mean, no matter where you went, it was very hard to find. So we wanted people to be able to see what it was. At the bottom of each page is the contact info, and that phone, is it all set up, Christy? So it's going to a specific phone number, which is directly related to the hospital district. If Christy doesn't answer it, any messages that go to it, it flags it to us to check messages and respond to them. The domain name is ghdtx.com. We want to keep it short and simple. We kind of started off with the GainesvilleHospitalDistrict.com, but we toned it down to just as small as possible. The next thing we went through was board members. Kevin has said we need to definitely have the board members on there. And it just lists name and photos on here. The public information, we wanted to keep obviously pretty simple also. So notices have really anything to do with what's really coming up. These are kind of the two latest things that came up. In the notices, I think the next thing will be is the election information. The agenda obviously has to do with the current agenda, which automatically goes to a Google Docs thing that people can either download or print off of. On the agendas, do we have all the past agendas there, or that's the next one?
Agendas, it's just current month.
I'm sorry, it goes to minutes, I'm sorry. Yeah, minutes has the past minutes, going back quite a while. What was the last thing, the budget? I think we had the budget, which right now obviously has the current budget on it, so that's one of the things we're obviously working with Shelley on. The videos will go on the minute sections, in the minutes, I think we're gonna go. So we're getting he wants us to set up a YouTube channel because it's the easiest and cleanest way to do it. So we're getting that set up and it should be up within the next month or so. The cost of this really on a yearly basis is not that bad. It's I think it's $600 a year. Ends up being about $700 a year, and about $200 to $300 in maintenance a year. So it's only cost us about $1,000 a year going forward. It includes 5 email addresses, so 6 email addresses. So what we ended up doing was having, we just said set it up so that the 3 executive committee members have one. Accounting has one. We have a district one that kind of goes to general one, and then Christie will have one as admin. So that's the ones that we had. If anybody specifically wants a email address, you can let us know. It's just connected. It's I don't remember what the cost was a year. It was
$56.
$56. So every time we add an email address, it's $56 if anybody specifically wants one. So most of y'all did not want a separate email address, but
Is there a link off of the NTMC website to this site, or is it
Yes,
part
sir.
of that site?
I think it's supposed to be in our
Yeah,
office.
it's-
Yeah, if you scroll down there, there's a big bar that goes across right there.
Oh, okay.
We may not have gotten the link yet.
Yeah, so it will go.
It will be.
So right now,
It's in that first page.
not to get us off track, but our webpage is just the front page is new, but all the links behind it are still the old stuff while they're building all the new.
Yeah, and that was the thing, talking to Brian, y'all are going through a pretty major website upgrade.
Correct.
So I think he said it's probably the end of the first quarter before you've got some substantial.
End of March.
As an example, if you that's the new model right there, and scrolling through. But if you go up and just click any of those links, you can see what it takes you back to that old style. So we've definitely upgraded, the appearance and
Right.
moving forward, brought it modern.
So I was pretty happy with it, just short, sweet, to the point. We didn't want to get too crazy or make it pretty easy to work with. So everybody's good with it. We set a budget of $5,000 to get the initial thing set up. With all the setup and the guys' times doing the website and travel and training, they're going to be training Christie and some others on how to update things, so we don't have to have somebody update it every time. We spent about $4,500. So, and then going forward from here, really about $1,000 a year. So unless we want to add a bunch of email addresses. So, and it's pretty easy to change stuff as we go forward. So if 2 months from now we decide we want to add something or change something, it's set up in a pretty easy fashion, so we can change something pretty easy. So, but I think it's what we need, meets the needs of what we're needing to go for. So
We can
That's it.
Add as we go too. huh?
yep, yeah, we can add or change as we go, but this definitely gets us a foundation to build off of and
Good.
go forward.
Good job.
Okay,
So.
Before I go into information on bylaws, policy, and procedures, Tom is so graciously volunteered to be here tonight to kind of just let us know, kind of like in a just a general overall. He won't be here every board meeting, but thought he'd give us a little overall how the transition is going on. from
So
his
the
standpoint.
transition is going really well, and as expected, I will say, you know, there are some things that we knew we would run into, but it was planned and expected, so things are moving well. Volume's been really good, especially here in January. We've seen some really, really strong volumes. December was solid as well. Surgeries, I'm not gonna go into details, but surgeries were up and as well. More importantly, you know, I know that I want to talk about, not go into detail, but patient satisfaction, all indicators are pointing just way up from where we were, especially from where I started, you know, in July of last year. And even if you check out our Google reviews, you know, that sort of stuff, you know, that's improved. We have a better Google review than TMC now, by the way. So that's out there. You mentioned something earlier that made me think of something. The roof. The roof is done with the exception of over in the OR area. And the only reason that's not been done is because we're trying to do it during the weekends when we're not have scheduled cases. Because part of that roofing material gets pretty caustic with the smell. You know, with what they lay down and then they have to come back and reseal. So during the, you can't really shut the out, you know, air intakes out into the OR when they're operating, because you got to keep it at a certain temperature. You got to keep it really cool. And for the rest of the building, we could kind of play with that a little bit, not suck in that outside air, not spread that smell throughout the building. But with the OR, we're really trying to avoid doing anything in that area to bring that smell into that space where they're in a confined area with a really tight air system. So we're waiting to do that until the weekend. So I know they worked on it this past weekend, and it looks like we'll get another great weekend coming as far as weather goes next weekend. Next Sunday's supposed to be in the 70s, by the way. So they should be knocking that out. So the other pieces of it, they're, when they haven't been during the week and haven't been working here, they've been over at the MOB next door working on that. And when they get that done, I believe they go down to the building at the end of the street. So that's moving right along. Like I said, in generalities, we'll obviously give you a better report at the end of the quarter. But things are going well. And it's been an exciting time. It's been a trying time. Very happy to have Shelley, and it's made our transition go really well, and she's just jumped right in. Last thing, we hired a CNO. So CNO, Carrie Zaberski, she's a Yankee, but don't hold that against her when she gets here. She's very polite and very nice, but she comes with a lot of experience and fit our team and what we look for in a model. Had her interview with lots of folks, and I bet we interviewed 20 people for this position before we finally got, and we weren't going to settle for just anybody. We want to make sure somebody that, you know, met the criteria we're looking for, had the experience, and also met the, you know, what the team dynamics would be well with her. So we're expecting her to start on or before the 18th of February. She closed on a house. She came in last Saturday, made an offer, and got it accepted on a house in the Cook County area. So she's going to be here local. So it's exciting. We're almost, you know, we do have our full team now. So it's exciting.
Thank you, Tom. Appreciate it. Okay. Number 7, bylaws, policies, and procedures. Christie's going to.
Just want to give you all an update. Tonight, y'all will review your standing operating procedures. You'll also review your tax abatement guidelines. You have a total of 6 policies and procedures that are in your folder that we need to review. So your bylaws are up for review. So I wanted to give you all the option for me to email them all out after this meeting and bring them back to next month on the agenda with any revisions or requests, or do you all want to set up a committee to review those? But we will need legal to validate them as well for whatever changes we do make. You've also got your Director of Conflict of Interest Policy, your Director's Code of Conduct, and your Director's Vacancy Policy. So 4 things still to update, and then y'all's policy and procedure manual will be complete for the year.
I would say email to all of us, and that's how I would do it.
Kind of give me a month for y'all to get input back to me. That gives me a month to work with Kevin to bring it back in March's board meeting. Does that sound all right? Okay.
Good.
Does that work, Kevin?
Number.
You want this? No, you don't. This was just for my notes. Yeah.
Number 8, Consider and approve the annual audit presented by BKD. We had Chris Clark here to give us that update. And that's tab number 8.
Okay, thanks for having me back again this year. I've got a brief presentation for you to go over the audit results for fiscal year 2018. You've got in your materials a draft of the audit report and the management letter, and as I've done in years past, I've summarized all the key elements of that in the slides here, so that's where I'll focus. If you've had an opportunity to read through any of the documents and have any questions, I'll be happy to answer those, and if you have any questions as we go along, please stop me. The first thing to note is that we are in draft form tonight, but that's intentional to give you an opportunity to hear the results of the audit. Once you've approved the audit, if you do that, then we'll be in a position to move forward and finalize the audit, which will really just mean taking that draft stamp off and adding a BKD signature to the audit opinion. We are prepared to issue an unmodified opinion. That's auditor lingo for clean opinion on the financial statements. That means that BKD is providing a reasonable level of assurance that the financial statements are accurate and complete, and that the footnotes to the financial statements are also accurate and complete. We do have to disclose to you anything that's unique to the audit report, so anything that's not standard. There is a paragraph in the audit report itself that discusses the bankruptcy, which is a requirement. Last year, you might remember that there was also a paragraph that emphasized concern about the district's ability to continue as a going concern because of the financial position. Given what's transpired over the course of 2018 and subsequent to year end, those circumstances have changed because your cash position has changed and your current liabilities have changed. So we no longer have that concern, and that paragraph has been removed from the auditor's opinion. The next bullet point here are areas of audit emphasis. These are consistent with prior years. Inherent in any financial statement audit, a risk of management override of internal controls that have been established, and errors in revenue recognition. Those are significant risk areas that we test. And then significant estimates in your financial statements include accounts receivable valuation, third-party payer settlements, which are Medicare and Medicaid reimbursement program settlements, and then reserve for self-insured risk in your estimates for property tax receivables and that revenue. So those are where we tend to focus a lot of our time because those are significant estimates to the financial statements. And then lastly on this slide, we're required to disclose any significant issues that are discussed throughout the audit process, in addition to things that happen subsequent to year end, which is the lease agreement with CHC, the transition of the hospital operations to CHC, bankruptcy and district reorganization, and areas of proposed adjustments to the financial statements are significant issues that were discussed throughout the audit process. One thing that you'll note in the footnotes is a pretty long, note 2 is a pretty long footnote that discusses the status of the bankruptcy at year end and subsequent to year end, and then the change in how the district is organized. That's all summarized in footnote 2, which is new this year as compared to last year. We evaluate your accounting policies and practices for differences between accounting and industry standards, and if we saw where you accounted for something different than what we would expect, we would disclose that to you here, but we didn't have any findings of that nature. Had no difficulties encountered in conducting the audit, no disagreements with the team here, contentious accounting issues or anything of that nature. There was obviously a changeover in the CFO position, which always creates a little bit of time constraints, but Shelley jumped in towards the end of the audit process and really helped us push that over the finish line along with Jolene. And then we're required to also disclose to you any material written communications. In addition to the letter that's included in your materials, there's a letter that Tom and Shelley and Jolene have signed and given to us, indicating that they also believe that the financial statements are accurate and complete. I've touched on the significant disclosures. In addition to the bankruptcy and the reorganization of the district, other key disclosures in the financial statements this year include the defined benefit pension plan termination, the nature of supplemental Medicaid programs and the materiality of those to the district, and then kind of the resolution of the OIG investigation and the payment of that liability through the various bond issuances that you had in 2018. In the letter, we've touched on some internal control related matters that primarily relate to segregation of duties due to small staffing size here, along with some concerns associated with reconciliations and the timeliness of those and those reviews. Those comments are consistent with last year. Shelley and I have talked about those, and on a go-forward basis, I think as the transition continues, obviously there's going to be account reconciliations that no longer apply to the district, but I think it's going to be a lot easier from your perspective because there's a lot fewer accounts to reconcile, and the nature of those accounts are simpler to reconcile. You shouldn't expect any internal control related findings associated with account reconciliations, and we've talked about some things that we'll do on a go-forward quarterly basis to check that. So now I want to move into some financial information, and we've summarized 5 years of financial statements here for you. A few things to point out if you're comparing 2018 to 2017. This is summarized. If you want a more detailed look, you'll see that in the draft audit report. Here you can see cash and investments have increased from $3.3 million in the prior year to $8.3 million in the current year. That's a product, obviously, of not only a result of your current year operations, but all of the cash flow activity that was impacted by the bond issuances and satisfaction of existing accounts payable and the other liabilities that you had. All of those, because those were satisfied through the bond issues, that improved your cash position in the current year. You'll see down here in long-term debt and other, that went up from $27 million to $39 million, which obviously had an impact on your current year cash position. Accounts receivable was pretty consistent with prior year, and you'll see on a subsequent slide from a valuation perspective that looked very reasonable at the end of September. Your capital assets decreased, and that's just a product of a lack of required capital investment in the current year and depreciation. The biggest changes, I think, happened down here in the liability side of your balance sheet, and so a few things happened as a result of those bond issues. Number one, you paid off some accounts payable that were pre-petition related liabilities that have been there since you filed bankruptcy. The OIG liability was paid off, and then in addition, you had a $4 to $5 million net pension liability that was essentially satisfied through the issuance of bonds, where you use those bond proceeds to either pay out lump sums or buy annuities to satisfy the obligation that you had under the defined benefit pension plan. So this went down because you had less accounts payable in the current year. This went up because the amounts that you had to pay out to satisfy those obligations were greater than the liability that existed. So if you think of, and the pension was the biggest piece of that. So you had a net pension liability last year of around $4.5 million, but the bonds the amount of money that you had to borrow to satisfy that obligation was in the neighborhood of $14 to $15 million. So that ended up in long-term debt. So that's why your total liabilities went up in last year.
We had a $4 million pension liability, and we bonded $14 million to take care of it.
Right.
That made a lot of sense.
And the way that the pension liability works is that historically you had a gross pension liability last year of about $18 million. You had assets of $12 to $13 million that offset that. And the way that pension liability is measured is based on the projection of the life of the plan. So because you satisfied that liability today and that liability is no longer on your books, that's why you had to borrow more money.
But with the stock market and everything going up, we probably wouldn't have had to.
Based on the terms of the defined benefit plan, it would be hard to answer that. I think that it would be difficult to find yourself in a situation where you only had to borrow the balance of the net pension liability last year. I think you would have had to borrow in excess of what the pension liability was. those are all based on actuarial determinations, based on what you had obligated yourself for through the date of the pension plan termination. So a couple of ratios that we look at when we're evaluating your financial statements. One is net days in accounts receivable. This is on average how long does it take to fully adjudicate a patient claim. You were at 55 days last year, went down to 49 days this year. You've been in that 50-day range for a number of years, and it's pretty consistent with industry averages. That bright red line is smaller rural hospitals from around the country, so you're clearly below that, but in a range that we would expect you to be in. Net days cash on hand improved from 35 days last year up to 70 days in the current year, so right in line with comparable size hospitals at the end of 2018. Here's a look at your income statement over that same 5-year period. You can see a total loss this year of $3.6 million as compared to $5.8 million last year. There's several things going on inside your income statement this year that I want to point out. Number one, you'll see net patient service revenue went up in the current year. That's a product of improved volumes in 2018 as compared to 2017. Your supplemental Medicaid funding was also more favorable in 2018 as compared to 2017. And if you'll recall last year, there was about a $1.3 million liability that had been recorded because of an estimated payback of prior year Medicaid UC funding. In the current year, there was a lawsuit associated with that settlement of that program. That resolved favorably to the district in 2018. That wasn't a lawsuit specific to the district. It was a lawsuit between the state and some other hospitals. But the resolution of that was favorable to hospitals. And so that liability went away, so that flushed through your current year revenue. So those are some reasons that your revenue went up so much. The thing that might stick out to you the most is the increase in salary and benefits here. And the reason that increased so much is because that additional money that you had to borrow to terminate the pension plan all went to pension expense in the current year. So there was about a $6 million increase in your pension expense in the current year as compared to prior year. So what I've done on this slide is to try to highlight some of the one-time type events that impacted both 2017 to 2018 to give you a more apples-to-apples comparison on the overall performance of the district. So the top line here is what you actually reported as a loss. And then here I've added back bond issue costs. So you had $774,000 of issue costs last year and $1.8 million of issue costs this year. You had the OIG settlement that was an expense in 2017. You had bankruptcy fees last year of about $1.7 million. And then this is the waiver recoupment that I mentioned. Last year we recorded a liability, so that hit your expense. This year we reversed that. We had the pension termination expense of $5.5 million. And then you also had insurance recovery proceeds in the current year associated with the roof damage. So these are all sort of like one-time events that had material impacts to your financial statements. If you factor all that out to get to a more apples-to-apples comparison, last year you could say that the result would be a loss of $817,000. This year, a positive margin of $1.5 million. So obviously those numbers aren't real, and that's not what gets reported in your income statement. But if you factor out these types of things, it'll give you an inclination of what the true improvement in the operating results were in the current year. Another comparison that we do is net revenue to cash collections, the red bar being revenue and the blue bar being collections. If you look at this over the 5-year period, you've collected about 100% of the revenue that you've recorded in your financial statements. So that gives us comfort that your revenue recognition process is reasonable. And then lastly, this chart compares salaries and benefits to net patient service revenue. If you go back to the income statement back in 2016 is when you had one of your largest losses, and that's because your net patient service revenue or your salary and benefits as compared to your net patient service revenue was so high. You brought that down in 2017. It went back up in 2018. This says 2017. It should be 2018. It went back up here. But the reason is because of that pension termination expense. If you pull that out, this drops down to about 48%, which is really in line with a good improvement from a management perspective, and really more in line with where a hospital would want to be on a go-forward basis. So if you think forward to your 2019 financial statements, you're going to have, this was the last year where you'll show a full year of operating activities from operating a hospital. In 2019, you'll have 3 months, 2 months of patient revenue and associated expenses, but then through the effective December 1, you'll basically just have lease revenue, tax revenue, and then expenses associated with whatever employees you maintain in the district, if there are any, and then IGT-related expenses that you do on behalf of the hospital.
Are you going to be representing us from now on, or will you be representing GCH?
Well, we've been engaged by the district to provide financial statement audit services, so I would anticipate that would continue. Andy and I've had discussions about some quarterly oversight procedures that we would do on the district's account. We are meeting with CHC in the week after next, or next week, to discuss the transition that occurred and the working capital that was transferred, so that we can make sure that all gets accounted for properly in each of the entities. We've not had any discussions with CHC at this point about what services might be provided to the new company that was created to run the hospital.
Remember, we retain BKD on a quarterly basis, and we have not stopped that yet. And if it's unless you guys think differently, what Chris is going to do after he talks with CHC is he's going to give us a proposal to have more of a hands-on, whether it be quarterly or even more often. But we would really like him to be in that mix of having an understanding of what our finances are as this transition goes, and probably last the whole year. Like the minimum of every quarter, and his involvement. He's going to give us some thoughts on what that involvement should be. But what I think that what you all wanted when we put him on as a quarterly is someone that could be oversight. That could be oversight of our financials. When we don't have that anymore, basically.
When we had the management agreement.
Yeah, when we had a management agreement, and so it's going to change a little bit as to what we would want from him.
Right.
But we would certainly want some kind of working with the GCH to have some kind of an oversight. 2 reasons. One, so that he can represent the district and give us a good picture of what our financial is. And 2 is so that we won't have to, at our next our annual audit, they won't have to go back and try to resurrect stuff during this transition. They can have it at the top of their heads. So I think he's going to bring that back to us, and probably in the March thing. But in the meantime, he's still doing the quarterly thing for us. He's going to give a proposal to us for what he will do for the district for this next year.
Who keeps an eye on CHC?
That's what he's going to do. That's what we want him to do.
So the CHC essentially is providing financial reporting services back to the district. So I think there's some things associated with your cash account reconciliations and other things that you're going to want some oversight of. The other part of this is that there's an obligation for CAC to transfer money back to the district based on the operating results of the new operating entity, so there may be some things associated with that that would involve some oversight.
Yeah, I just want to see CAC take their nose dive, that we not be aware of it.
Right. And I think, you know, once we have the opportunity to meet with CAC to discuss the transition, we can, as Andy mentioned, we'll bring back what we think would be a reasonable approach to provide, I think, what you're looking for.
I don't see my behind it. I just like I said, I don't see
Right.
it nose dive.
Right.
When we wake up, we're stuck with another bankruptcy proceeding.
I understand.
Okay.
Any questions?
Okay.
All right.
So consider to approve the annual audit. Do I hear a motion to approve that? Motion, do I have a second?
Yeah.
Rob? Who did? Yeah. Okay. Any further discussion? All in favor of approving the annual audit presented by BKD, say aye.
Aye.
And opposed, same sign? Okay.
Thank you.
Chris, thank you very much for talking to you. Number 9, consider and approve tax abatement guidelines and criteria. That's in a folder. Christie, tell us about that to the board.
Okay, Miss Jennifer Clayman at Reed and Meeker reviewed these, and she made a couple of slight changes, what your current guidelines were. And you can see what change she made. I know one of the changes she made was to our ending fiscal year.
Is it in bold, Christie, is that some of the changes?
I'm sorry,
Is it in bold, the changes?
they should have been
Yeah.
underlined.
I
These are
Saw in
bold.
section 3, there was one.
Okay.
Section 3 at the beginning.
Okay, yes, so section 3, she may have changed tend to work, so it shows what entities we would work with on a tax abatement. County, city, college, school districts.
Did all of you have a chance to read this? Because it's, we're going to have a folder here in a minute. I just want to make sure you understand.
Yeah, that made the number 2 changes for fiscal year and
Okay.
then entities.
Do any of you have any questions or discussion on, well, even before I get a motion here on this, about the tax abatement guidelines? If not, I'll entertain a motion to approve these guidelines.
Andy,
Uh-huh.
I was thinking on that, finally, Cook County has a sunset provision. We're not into theirs right now. Are you cool where Cook County's at, on page 8? Keep trucking, keep trucking.
Are you on, are you on the
See,
last
go back,
page?
get past this and this, get to the Cook County.
You're on the
You're
next
not
one.
on.
Are you on number 9?
You're not on number 9, are you?
You're
actually
I'm
on
on
number
number,
10.
I'm on number 10.
Okay,
So we're on
that-
nine.
yeah,
I
we're
thought-
on number 9.
I know we're on number 9,
Okay.
but I'm asking about the sunset provision that the county has. You didn't read that well. Go to number 10.
What is the question on the sunset provision?
Why don't we have one? When you find it, you can read it.
No.
Section 10,
We do have one, it's on the, yeah, go to,
are you going talking about one that says guidelines and criteria once adopted by the affected jurisdiction may be amended or repealed?
right.
Yeah.
So that,
Theirs is a little bit-
that number 8 read the same to me as their
They
sunset.
don't read the same, but, you know, I think theirs is a little bit stronger.
Well, you also have to remember we're totally different entities. So we may have different tax code laws that we have to follow. So we do have a different tax code law than what the county or the city does. So Jennifer probably made these based off of, we're a special district entity. We are a taxing
We're
entity.
looking out for the taxpayers of this county.
But we have different things that we can do. So one example is, we can't create a reinvestment zone. That has to come from the city or the county
It
originally.
comes from the county.
We can't create that. So those would be a difference in a tax code.
Actually, I think our sunset provision is stricter
A
than
little bit
theirs,
stricter
because
than theirs.
ours basically
More
says
detail.
we can do it regardless. The county says they have to specifically not meet the goals that they achieve.
Theirs is 2 years, theirs is 60 days.
Well, ours is 2 years, and
Is it?
yeah, for the, on the very,
Where's that?
very last page.
Number 8.
Number eight.
Well, second to last page of the abatement rules, under number 9, tab number 9, second last page.
So we didn't really have. any
Number
change.
8 under section 7, miscellaneous.
And the first time that these were created, just to give y'all a history, Matt Barnhart is the one that helped write these, him and Jennifer.
Hmm. So, you're satisfied with that number 8?
There's your history lesson for the day.
So, the tax abatement, do I have a motion?
A motion.
Okay, yeah. Do I have a second?
Second.
Robert? And further discussion on the tax abatement policy, guidelines, criteria? Not all in favor of approving that guidelines and criteria, say aye. And all opposed, say two opposed. Consider and approve tax abatement for Cook County Solar Farm, BT Cook Solar LLC, Sammy J. Joe Rippey, and I-35, and DLP. Who do we have here?
I'm Austin Willis. I'm with Belltown Power, Texas. We're the developer developing the solar farm. We are based in Dallas. And, I can give you a brief overview of the project and then answer any questions you guys may have. It's about 350 acres, which we utilize as a solar farm. Utility scale, meaning that it will be an off-taker will need to be found, and the electricity will be sold to the grid at wholesale prices. It's a little bit different of a site. I know most of you have probably seen projects out in far west Texas, and you have a smaller one here in Gainesville. Things are starting to become more competitive with power prices and electricity in Texas, and with the way congestion works, it makes sense to have the generating facility close to where the power is needed. That's kind of been our approach, and we have 12 sites around DFW Metroplex that we have high priority that we've been developing over the past 2 years. This one will be, is projected to begin construction in July or August of 2019. Completing construction, call it February or March of 2020. So the full taxable value will be that 2021 year. It's about a final number's not been determined yet, but it's about 60 to 70 million is what the estimated initial investment is. And it's a 60 megawatt AC is how it's measured, so it's 78 megawatts DC is what there's an inverter switches from DC how it's collected to AC, and 60 megawatts AC is what's put out into the grid. That's about enough to power 15,000 homes, 10, 15,000 homes. We've been working heavily with ERCOT the past year. ERCOT and Encore, the utility that we'll be connecting into the existing transmission line. There's a 138 kV transmission line that bisects the property, and so no transmission lines will be built. They'll all be on the property. I guess any questions?
Is any of this electricity stay here in the United States,
It stays in Texas, yes.
states in Texas? Who are you contracted with now to deliver that source of electricity?
The contract hasn't been finalized and because I can't disclose the confidentiality.
Are y'all being subsidized by the federal government?
There is a federal tax credit, yes.
Austin, how many people will you employ with this?
To be honest, it's not a huge job creator. The value is in addition to the tax base, is taking ag land and turning it into a pretty substantial investment, tax it full tax. That said, there's probably 250 construction jobs, and about an estimated 7 to 10 million in local spending during the construction period. And then ongoing, there's an operation and maintenance contract for cleaning the panels, some electricity work if panels go out, maintaining the grounds, making sure the grass doesn't grow too high. And those are typically locally sourced just due to being easy, Gainesville close.
So you're gonna use the electricity will be used in Texas,
Yes.
but the local community, what is the real benefit to the local community here, other than, you know, obviously taxes, I mean, if you're getting an abatement, but, you know, what is the benefit for the community?
Or
We have
this
a-
district.
Well, so I think, Andy, can we go through this chart, because I think this helped solidify for me what this was doing. So, over on the right-hand side, so this property that you have now, we're getting $68 a year on. And if, for the next 30 years, on the bottom left, for the next 30 years, the hospital district's gonna get $2,700. By putting this wind farm in, over the next 30 years, we're gonna get $535,000 in versus the $2,782. So, once this chart up here, and correct me if I'm wrong, but so, in 2021, we're gonna get $40,000 that first year, and it decreases, I'm assuming, because of depreciation.
Correct, yes.
And then it kind of flattens out, and really just because the price of the land is not ag exempt. So that's the reason it kind of flattens out, because really your assets are depreciated through 2030. and
Yes.
It flattens out because of the land price.
So our property tax consultants believe that, well, there's a federal IRS depreciation schedule, and that's that first 10 years. And then after the next 10 years, it's held constant, the value, and then the final 10 years of the project, they estimate it'll depreciate about 5% a year.
So you're taking $68, and this thing's front-loaded for us as a district. We're gonna get most of our money in the beginning. Because of the depreciation, right?
Correct, yeah.
And this isn't on 35. We're looking at property that's well off of 35 that would have been ag land for a long, long time.
So
Yeah,
would
and
it
we
be
have a-
visible from I-35?
It is visible. There's a 900-foot setback from I-35, from the frontage road.
So it's at Spring Creek Road
Yes, sir.
and 35, so the west side.
Southeast corner.
Uh,
It's on the west side.
It's on the north side of West Spring Creek Road.
It's
West side. Oh,
They get a lot of land clearing.
So is this graph, has it got the 50% that you're asking for knocked out of, or is that the 100%?
It does, that's with the 50%.
So this analysis is with the tax abatement.
Correct.
Okay.
What, do you need us to build this? If you can't get it, are you gonna build it? You've got all the other entities
It-
already on board.
It's a very tight project. I mean, we're competing with projects out west that are selling power for significantly less, because the sun's better out there. And that being said, we like Cook County, and it's close to our home, and we want to do business here. But it is tight.
I'll tell you the truth, I'd rather see you pay me 80 grand.
I understand.
I'm not about to give you 50% tax abatement in 10 years. We got mom and pops around here, don't get a dime. They're taxed heavy. In fact, that 40,000 that you're showing to start off with, a lot of these people are paying that every year.
I understand. And this, to clarify, this is just for the hospital.
I know that's just for the hospital, but
Now, I see here the county, looks like the county approved it.
Yeah.
Correct.
And then, who else did y'all ask for abatement from?
GIC.
The college district has approved it as of December. And then we're working with Ura ISD on the 313 abatement.
We approve.
And that's through the state comptroller's office.
You know, we've given up enough, guys. We've been through bankruptcy, we've loaded our property owners up, taxpayers up for $39 million.
Gonna load them more. And gonna load them more.
And we don't need to keep giving the farm away, okay? We gave it to the Munster Dog Food Company over there, now they're not gonna build out here. We gave First State Bank a heck of one. These guys are not gonna bring a job to this county. Only people will be here working on it will be the construction. Once the construction's done, it's over with. They won't have a person on site. They won't nobody buy a home in this county that's gonna work here. They'll have people come in and service this, but that's all. And I can't see wasting that kind of money just so we can have a solar farm here. We got one solar farm up to the north already.
I'm only interested in the taxes myself.
Me too.
I'm going from 60, you know, I want the cash in our doors. And I hear you, Ken, I hear everything you're saying, and I don't disagree with some of it. But I want to see this here for one reason, and that's taxes received by this district.
And if we don't give it to them and they build it here, you get 80,000.
I get it, but I want to promote more of this. I want more of this. And I'm saying it's not on 35, it's not in a corridor. You're talking about ag property that we're gonna turn to cash.
And you're talking about here in the next several years, Interstate 35 will be 4 lanes north, 4 lanes south. This county is fixing to either grow or it's not gonna grow, okay? And the more, when we get the people moving in faster where they can get back to the Metroplex, this county will grow. That will take up 250 acres of homes. That one day will be there. Jane, me and you may not live long enough to see that.
That's what I'm telling you. I would like to see this in our account next
But
year.
I want to see 80,000 come in here, and I don't care whether he builds it here or whether he doesn't. You
I
know,
totally understand what you're saying. I just don't think you're gonna see that property be utilized in the next,
you know.
I'll take my money now on this deal.
Every fat cat that comes through town gets a tax abatement. We got a bunch of small businesses in this area that has a hell of a time paying their taxes. And here you're taking and giving away that kind of money, but you're still charging the small businesses and the people that can't hardly make their taxes, and you're still charging them, and you ain't giving them a dime off.
Hey, I'm
They're
one of
gonna
them, I know,
charge,
Jimmy.
they're gonna charge you, Shane, the way you guys do, it evidently don't bother you to pay your taxes. There's people in this town, in this community, in this district that have a hell of a time paying their taxes, period. And to me, if we're gonna give anybody an abatement, we're gonna give anybody a break, let's give the poor people a break, or the small businesses that have a hell of a time making their way. I would rather give them a tax abatement anytime and knock that money off of their tax bill as to give to somebody coming through town.
The spirit
Period.
of a tax abatement is new progress. That's exactly what that bar is doing for us.
Expand the tax.
We're
tax
expanding our tax, but that's the intent of it. So let's utilize it and let's take our money now. I'm good. Y'all have further discussion. I'm done.
Second, vote on it.
If my, just, I gotta clarify a thought in here in my head. If the, at 50% abatement, it increases the tax base overall,
Yes.
doesn't that lower
Yes.
the taxes for the individual?
More comes in, the
You
more
ever
gets
seen that
spent.
happen, Andy? Do you see, do your taxes ever go down on a year's time? No, they go up. Every time we turn around, we're increasing our property tax values.
We never get a cut. For any money like that comes in, you never
When
get a
you
cut.
say
They
you
just
don't
spend
vote to
more.
raise the taxes, every time you vote to leave our tax rate at say 4.5%, you just voted to raise our taxes. You need to lower that 4.5% to 3.5% to accommodate what the property values increase.
Every time the valuations go up, you're paying more.
If they don't.
We never get a break.
It's interesting, why?
Never get a break.
I hear what you're saying, Andy. This gives
You're
us
giving
the
every
ability
fat
to
cat
do
that comes through town a break, but you won't give your local people a break, period.
You know,
Okay,
y'all go ahead. Go ahead.
All right, so we got a, consider and approve the tax abatement for Cook County Solar Farm. Is there a motion for that?
I'll make the motion.
Okay, Shane make the motion. Do I have a second for it?
I'll second.
Bobby makes the motion, second. And further discussion? All in favor of that, the tax abatement, say aye.
Aye.
Opposed?
Aye.
All right.
Okay, so, okay, so we're, thank you, Austin.
Appreciate your time.
Appreciate that, thank you. Consider and take action to amend the fiscal budget for the district reflecting the lease of hospital. Okay, that, I don't know if we have to really have action on number 11, do we? Because that, we don't have that final budget for the district yet.
We don't have a 2018.
No, we don't have that 2018, 2019 fiscal budget for the district. That was asked for, I wanted someone to put that on here, but I hope you, can we table that? Is that good? Make a motion to table number 11 until we get our budget done? Can I have a motion to table that?
Motion table number 11.
Okay, Ken, second?
Second.
Oh, number 12.
I've got no, it's number 11.
11. Number 11.
Okay, and Jen, if no further discussion, all in favor of that, say aye.
Aye.
Opposed, same sign. Okay, consider and approve revision to the Gainesville Hospital District Board of Directors Standard Operating Procedures. This was given to the whole board last month, and I hope you had an opportunity to really, look at that. And so before I ask for approval on that or a motion, is there discussion? Let's go right to the discussion. Do you have some things you want to change on it, or you like the standard operating procedures as they exist?
Number 9,
Okay, let me just get here. Which is that? Okay, number,
I don't have a problem with number 1.
are you on Roman numeral?
Well, never mind.
Yes, meeting
Last
inquiries to
page.
the board, meeting inquiries to the board.
Meeting inquiry.
Okay.
I have to get out of here, I'm sorry.
What page, where we at?
Okay.
I don't have a problem with number 1, I have a problem with number 2. It's been a minute. You're asking me to give up my First Amendment right, and I will not give up, I didn't fight a war to give up my rights. So you guys do what you want to do on it.
Ken, it's been my understanding, because I feel like I've been in that situation before, and the only thing I ever clarify is I think that's the only thing you have to clarify is, this is a personal opinion. I'm not speaking for the board, I'm not speaking for the district. I'm gonna tell you what I think, and this is a personal, and I've made some, we all have. But if you designate that it is a personal opinion, and you're not speaking on behalf of the board, I think you have everything you want.
I'm not speaking for the
Right.
board when that newspaper calls me, or KGL, any of them calls me and ask for a comment. I'm not speaking.
Am I right, Andy, in remembering that?
Remember that all of us, we only have a function as a board. We function as a board. We don't function as 9 individuals. That even though we have 9 individuals, that's why we vote on things, because the majority of the board puts the policies or whatever into effect. But the only power that exists within the board is by the accumulation of the board itself, not in individuals. So it is, I think the purpose, and I didn't really have anything to do with this, it's always gone to the CEO of the hospital, but because we are now the district and don't have a CEO, I think they probably put that on the president of the board, put on somebody simply for a purpose of so that you don't have 9 people out there expressing board opinion. And, you understand what I'm talking about? So because anyone can go to the paper or whatever and express their personal opinion, but are they speaking for the board or are they speaking for themselves? And that's the big difference, because I think if any one of us went to the paper and we spoke, the paper could easily say, oh, that's the board speaking, because you're a board member. Am I hitting? You don't see that? I'm just saying if you could assume that. But, so I don't, it doesn't matter to me, but I think that there's always been in place in any board a a standard of doing things that take something to where if a person speaks, they speak for the board.
Let me say this, anytime we vote on anything here, and the board, and a newspaper calls me after we vote, and it's approved and everything, or disapproved, I feel I have the right to speak to that newspaper.
You do, absolutely.
Now, prior to this meeting, I'm not gonna say anything to that newspaper lady till we have this meeting. Anything after that is open records,
As an individual.
as an individual.
Sure.
Right.
I don't think that takes that away.
No, I don't, they done it all.
I don't think it takes that away. That's just when you're speaking as for the, this really has to do with speaking for the board. I am speaking for the board.
Okay, then we need to rewrite that then.
Well, you know, here, a year or so ago, Robbie went out there and spoke to the KGF radio, and he was speaking his opinion, not on what was voted on or anything, he spoke his opinion. And to me, if we're gonna do that, as being president of the board, you wanna go speak your opinion, then I got the right to speak my opinion too.
Yeah, I don't think
Well,
this
I
keeps
shouldn't
any of
even-
that from going. I don't see this as a hurdle. I think
Well-
as long as you make that statement.
Well, then let's just strip it out of there and be done with it.
Take it out.
Ain't no problem taking it
Well, I
out.
think what it's saying is you can't speak for the board, that's all it's saying.
That's all it's saying.
Put that in.
But have your own
This-
opinion.
This is not speaking for the board.
No, you don't have to say something that's on you to.
Oh, no, that ain't what it says,
But we
Shane.
could-
It
we
says,
could-
you need to reread it.
We could put
It don't
that
say
for-
that, it says, all board members who receive calls from the media. If the media calls you, is what it says, you should direct them to the board spokesman.
That's because number one says the president of the board or his or her designee shall be the official spokesman for the board.
For the board.
So it's just saying, hey, by the
Board
way,
business.
board members, if you get a call from somebody, make sure you let, I mean, you would just approve that the president of the board is the official spokesman of the board. So it's just reiterating the fact that, hey, guys, if you get a phone call, make sure somebody knows.
Well, common sense.
Well, then write it like
Speaking
that.
For a board.
What's what it says.
That's how I'm
It's a
thinking.
board meeting. To the-
Yeah.
But personally, you can, yeah,
So you wanna
We all
put,
have
would you
our-
like to put a short blurb after that and say personal
I
opinions or?
take it out because common sense tells you that the board president is the one that makes all the speeches to the media prior to the meeting, and he has the rights to make those, he has the right to speak after the meeting.
Okay.
Well, the header tells it all. It's media inquiries
To
to
the
the
board.
board.
Exactly.
Not media inquiries to a personal matter or an individual. So that's your overall subject. It's regarding the board, not your individual self.
number one says it all, number two is implied in number one, so, I mean, it
We
really
don't need
doesn't.
number two. It implies number one. We don't need number two.
I wish we could always work under common sense, but you can't always, can you? If you get a board business question, and it's not your opinion, you need to direct it to the president. I think that's all it does.
So then there ain't no problem taking it out, because that's what you're gonna do.
If that's what you're gonna do.
I just.
I am completely fine taking it out because
I am,
Number
take it
two.
out.
number one
Then
says
take a
everything
deal.
they say. We're not allowed to speak for the board, period. So that's what number one says.
I'm not speaking for the board. I'm speaking for myself right here, right now.
It's just, all it's saying is if you get a phone call from somebody, tell the president of the board. That's all it's saying.
This lady's not gonna call me prior to a meeting and ask me what I think about this agenda item.
There you
All
go.
it's saying is if you get a phone call, call the president of the board. That's all it's saying. That's all it's saying, so. If you strike it, you
I'm
strike
still not
it.
signing on it, Jeff.
Okay.
I still will not vote for this. Take it
So
out.
if number two is
We'll
out
take
of
out
this,
number two.
we're-
I'm good with that. I'm
Let's-
good to go either way.
There's six of you.
Ken, we'll
here.
take it out, number two. All right?
Would you approve minus number two?
Take it out, bring it back to us, put it on the agenda for the next meeting.
No, we'll take
Well,
out
let's
number
take it
two.
out.
Make the motion.
We can strike
Take
it
it out.
Make
out.
the
Number two.
motion. Yeah.
We got, yeah. We'll take out number two. That'll make you happy, won't it?
Take it
You're
out.
gonna bring this back for me to review.
Well, you've
Well,
already.
you've already reviewed it. Just take it out.
And we're gonna make it part of the motion.
We're
that
gonna
Tim's
make
done.
it part of the motion? All right. Who's gonna make the motion?
You wanna make it?
How about let me give a shot? We would
I'm
approve
gonna listen to
this
your.
minus with the removal of number two under section nine,
On,
Wait, 9-2.
9-2.
on number 9, media inquiries to the board.
Number 9-2, be omitted. That's your motion?
That's my motion.
You got that? Okay. Do I have a second for that motion?
I'll second.
I'll second that. motion.
Yeah, I want Ken to say.
Second.
You want Ken to second? Okay, Ken,
I'll
you can
second that
second.
motion.
Okay.
Now that it's out there.
Is it- okay.
Now then, ask for a vote.
Okay. All in favor of the approve of the revision of Gainesville Hospital District Board of Directors Standard Operating Procedure with stated changes, say aye.
Aye.
Opposed?
Aye.
Hey, Robert, you know, Robert's gonna vote against me, and Darrell's gonna vote against me, and Darrell's not here tonight, but Robbie's representing.
Let's move on.
Okay. Consider and approve resolution to grant signature authority to file and process claims for Texas unclaimed property. That came from a board member's request. I put it on here, but, what?
That's fine.
Okay, go ahead.
Yeah. So we're on 13, right? Yes.
13.
Okay, so last year I applied for Texas unclaimed money for the district and any entities underneath that. We received $16,568.50. That was what was paid back to us from the Texas Comptroller. This year, upon doing this research with Gainesville Hospital District, North Texas Medical Center, and then any of our clinics, we have outstanding $6,736.83 that needs to be claimed. The resolution that is in your packet is giving me the authority to file the paperwork and do that completion as I did last year.
You ain't got it done, I'll make the motion to get her done.
Okay, I have a motion by Jimmy.
There you
I'll
go, let
second
Christie
Jimmy
do
on
that.
Ken, will second it. Grant signature authority for Christie to file and process claims for Texas unclaimed property. All in favor, say aye.
Aye.
Opposed, same sign.
Thank you, Christie, for watching it.
Consider and approve the order to call election to be held on May 4th.
All right, so this is another one that I am responsible
Same day
for
in
for the
college.
district. As of right now, we have one person that has applied for the board. It is open until February 15th, correct. So this is just stating that we are ordering it due to our meeting times. We want to make sure that we are following the election code, so this gets it to where we're compliant. If we need to cancel it, we'll cancel it.
Is that the same day as other entities in the
It's
town?
the same day. If you will turn to the third page, as I always do, I give you all a timeline of the election events.
Now, with our new meeting schedule, it's not gonna affect the time.
No,
Okay.
I have adjusted the things that need to be done, so yes.
Does this also discuss locations?
It does not. That is still in consideration with the entities to discuss a new polling location for precinct 8 and 22, which is our Lake Kiowa.
That'll be in March.
And that will be in March, yes, sir. That'll be our notice of election. This is our order.
Okay. Consider and approve the call to election. Do I hear a motion? Ken, second?
Second?
Jeff? Any further discussion on that? All in favor, say aye. Opposed, same sign. Consider and take action if necessary regarding the retention of legal counsel for Gainesville Hospital District. This was brought forward by one of the board members. Who wants to speak to it? I think, Ken, you brought this forward.
Which one did you have that on?
15.
15? Yeah, I think we'd all discussed earlier before even the last three board members were elected that we need to replace our board that we have and bring somebody else in. It's got a new outlook on this and everything, but that's my personal opinion. I don't like Kevin. I think he's given a bunch of bad legal advice. Who knows?
So when we were working with the lease on CHC, I got to work with Kevin quite a bit. I gained quite a bit of respect for him. And what I would like to do is ask that we table it for this fiscal year to get us through this transition. He was helping with the deal between Hall Render and also with with them as far as the lease, knows all the ins and outs of it. So what I'd like to do is see, can we push this to the end of the fiscal year? Let's talk about this in September and get us through this, so we get through this first year under CHC, and then we consider it.
I think what we ought to do, that's fine, but I think anything that is not related to this lease, we might want to hunt someone else.
Well, we can consider that too. It's just,
Well,
if we can get
that's
through,
what I'd
if we can
like
get
to
through
do.
this first year, especially with some of the,
We get somebody else
I hear what
to,
you're saying, but I'd rather go ahead and vote on it tonight. I, for one, don't want to get rid of Kevin. I think he's done a good job for us, and he's been very well known around the state. He's one of the best hospital attorneys there is, and I don't share their opinions that he's given us bad advice.
every bad decision that has been brought to this board,
I think he's given us
and the board,
good, correct advice. He's been there a number of years, so
I've
that's
known-
my 2 cents.
I've known Kevin for many years, even when I was in South Texas, I've known him. And Kevin has always been straight shooter with me, and I have nothing but trust for him. That's my thoughts on the matter.
every bad decision that's been presented to this board and the board has voted on, you look at the bad decisions, they all come from Kevin, or related to Kevin in some form or another.
I know y'all got y'all's opinions, you've got a lot more history than I do, but shoot, I'd like Jeff, the time I spent with him, as we worked many after hours over that lease. Every time we interacted with him, I was encouraged by what he was bringing to the table. He really did earn my trust during that process alone.
Well, I will even take that, because I can do that, just like the rest of you, take action. I will make a motion to retain Kevin Reed and his law firm.
Is that a motion?
That's a motion.
do we have to put a time frame on that?
I'll second.
We're in discussion,
Okay.
and we've got a motion and discussion. Okay, go ahead.
I was gonna say, do we have to put a time frame on that? And it's just, that's a very broad.
He's an ongoing contract. If we,
It just has-
anytime we
We
can
don't
tell
really
him,
hire
go
him.
away.
Yeah.
I mean, But for whether that's for this year or longer, at least,
So really, we're not, if we do at the beginning of the next fiscal year, wanna look at somebody new, we have the option to.
always have the option.
We're gonna pay $400 or whatever he charges every time he comes up here, when you could get somebody else that would be local.
Without the knowledge.
We don't need to know about hospitals, Robbie, we need a business attorney, and there's plenty of them out there that we could save money.
We need possible district attorney.
It's gonna cost you every time he comes up here.
Yeah, we're hoping that's a lot less.
Brian Barry, he can handle this.
Our meetings are cut in half already, so.
Right.
I don't think so.
Yep, it's gonna cost you every time, or there's other attorneys that could be business attorneys.
I'm good with that.
So we got a
As long as
motion
we
and a
get the
second.
Option, but.
All in favor of retaining Kevin?
Uh,
1, 2, 3, 4. How many retaining? 1, 2, 4, 5. And obviously 2 no. Consider and take action. I'm gonna put him on the phone, by the way, because I wanted him to hear the rest of this and then go in closed session with us. Consider and take action, request proposal of sealed bids for depository-related banking services. Christie's gonna tell us about we have an account with First State, as soon as she gets him on the line. We have had that, let me see, it's probably in here. I think our last contract with First State or going out for bids was like 2011 or 2013 or something like that.
Hello?
Hey, Kevin, we're finishing up about 3 other things for action, and then we're going into closed session after there. Okay, you all right for that?
Yeah, I'm fine.
Okay, we're on the consider and take action and proposal sealed bids for depository and related banking services. Now, I think you had told me, I think that's one of the questions I might have asked you at one point this month. We don't require, that the district does not require to have so often to go out for sealed bids for banking. Is that correct?
That's correct. I looked at your statute, and some districts are required to bid. You're not required to bid. But I still think it's a good practice to do it periodically.
And when's the last time we did?
2011.
2011 was the
Hey,
last
Kevin,
time.
how do you bid? I mean, being a public entity, I mean, I don't think it's a situation where we can take the best return on investment. So how do you bid the?
No, yeah, you're not taking, you're looking at fees, not return on investment.
Right. We do it at the college.
And now that our banking-related needs have gone down quite a bit, is there anything specific we should or shouldn't ask for? I guess you can help guide us through what the bid will look like.
Yeah, I can certainly send you copies of bids that other people have done, and I think those would be helpful to you. And I think you'll find that the banks are used to getting them, and they're pretty good about giving you the information that you need.
Okay. So we have, consider and take action to request proposals. Do you all want to do that? Do you got a
I
motion
think
for
it's a
that?
good idea.
Got a motion? Ken?
That's a motion.
Ken?
Can we take that through a committee, or can we just put it out
Let's
there?
go to let's get a second first. And who's got a second on
I'll
it?
second.
Oh, it's Robbie, okay. Now discussion. What are yours?
But
Is
my suggestion is that you get the bids, you let the finance committee, and I think you still have the finance committee, look at the bids, make a recommendation to the board based on the bids.
Okay. Okay.
Kristen, you disagree with that?
I was just saying you don't have a finance committee anymore.
No, it's all of us.
It's all of them,
Yeah.
yeah.
We can do it. Okay. So, so we got a motion and a second. All in favor of doing that? It's going out for sealed bids for depository and related banking services. Say aye. And opposed, same sign? Okay, approved. Review of current depository signature authority and take action to add or delete signatures as needed, including action appointing 2 board members as signatories on an operating checking account. That's something that was also asked. We currently have that actually as a requirement. That's already a requirement.
Yeah, but since we're starting a new season here, as they say, we're gonna be paying some bills now, I think, so, who's gonna be approving those bills?
Well, there's 3 signature authorities right now. It's these, us 3 have signature authorities, and it takes 2. It takes 2 to do that.
Now, who's gonna approve the bills that will be paid?
Can I add something to that? I mean, generally, the way you would do that would be if it's a budget item, you just pay it, because when you approve the budget, you approve paying it. Now, if it's something extraordinary, like if it's above a certain amount of money, then it should come to the board and let the board approve it.
And what is,
50,000 is our current resolution.
we can,
And we can put all of that into a policy that we can add to this.
That ought to be dropped a bunch since we're not doing any
Yeah.
business.
Yeah, it's not a whole lot. The
Yeah,
only things that have,
50,000.
we approved the,
The roof
You know
is
what?
an example.
Well, we
that I
approved-
required 2 signatures from you.
but we approved with the lease, the ability for GHC to ask for backstop money.
That needs to come to the board.
No, it was already approved,
It's already
it was already approved in the lease, so that's approved, and then really, we haven't had anything over 50,000.
Well, we do, one of the things we do right now though, and I think this would this fall under, Kevin, is that when the accounts receivable money comes in, it comes into, at this point in time, because it's still under the district, it comes into the district, we transfer that over to the GCH, because they get the accounts receivable, that's what they're functioning with the hospital with. And that takes signature authority, and usually 2 of us do that. So, does that fall under that too, Kevin? Because those are, you can get 250,000 in the accounts receivable coming in.
Yeah, I guess I would say that was still a lease issue, because anything that was required under the lease, I don't think has to have board approval, because you agreed to it already through the lease.
Okay.
At what point do we stop receiving accounts receivable?
When they get all of the, when all of the contracts are all changed over? So when the contracts under that, the bills that are paid and that go into the accounts receivable actually will go to GCH instead of still in the district. Okay? So, that's gonna take a while. You still get some checks that are gonna come in through the district. That's why we want BKD to be watching this.
Right now, and that should take, should take
6 to 8 months, surely. But it's a lot of accounts receivable, a lot of people don't pay up for a long time, and you gotta argue with them.
There ain't no end to how long it could take.
Yeah, might even longer.
I mean, it could be after someone died and it's part of this estate settlement to pay that bill.
So,
Yeah, I wouldn't be surprised if you'll be getting AR for the next year.
yeah.
Partly because they're in the process of the change of ownership right now. The change is going to take 120 to 180 days, and so you're going to still be you actually won't stop billing under your number for probably 120 days from now. And then that means after that, you've got at least another 120 days of collections after that.
Okay.
You're just paying bills for the rental property and utilities and that sort of thing.
Yeah. So that really would be the only thing that would be under what we'd have to pay for.
The only
Things
big- big
like our
difference
insurance,
would be-
although we did have a big insurance, that tail coverage, you familiar with that, Kevin? That tail
Yeah,
coverage
I am.
for insurance?
And
I think that's in
I would think
January.
that's and I think the board should approve the insurance package and the cost of the insurance. I think that's a reasonable thing to come in front of the board.
We have that.
I can present that next month. The reason why I did not put it on the agenda, so I'll explain my reasoning, is that y'all had approved an overall amount at the beginning of the year when we did the insurance renewal. We canceled most of those policies because underneath the lease agreement, it was not our responsibility to maintain those insurances. And what we picked up was tail coverage on the professional liability for the providers, and the offset of that still kept you under what you had budgeted for your total insurance package for the year. And as Kevin mentioned earlier, if it was budgeted and it didn't exceed, just pay the bill and move on. But if y'all want that brought, I can definitely bring those numbers next month.
To me, some examples of things that might come before you on a regular basis, like on some of those rental properties, if you have major repairs, that probably stuff isn't budgeted. Like if you have to put a new roof on something, if you had some damage to a building, if you had, if the AC goes out and it's a $20,000 expense, even if those are under the 50, they're not in the budget, and so you might want to bring them in. At least have the board know that those expenses are happening.
Any expense actually that we can, that's over or that we can get to a board. But we always do have more than one, though, to answer that question for you, Ken. There's always a requirement that it's more than one person, so.
That's not a problem.
Okay.
You just want to take no action.
So
on
we can,
17.
so no action on number 18?
I just would hope that
Wait a
whoever,
minute. That's number 17, I'm sorry.
I would just hope whoever signed them checks, somebody don't just sign a fistful of them and then the other guy just take care of it. They need to be signed
Well,
for each bill.
yeah, we do, and as I told you before, we have obviously, I think a big responsibility here because, she's not a financial person, so, when I go over there and they present to, especially when I'm changing, transferring over from Gainesville Hospital District to the GCH, the accounts receivable pay, every single one of those is on there. Every single payment that comes in, what it's for, who it's against, and that's what we're asking BKD to audit, so that they can keep that overview of going. And, I think they're honest people. I believe they're honest people. We're doing business with honest people, but we do it to keep everybody honest.
Good. That's the whole.
Yeah, and so it's, and I think we take that very serious, Jimmy, I really do.
What I was saying,
I
is
do.
whoever signed the checks, I hope somebody don't just sign 10 of them and
No.
here they're signed.
No,
Because I've
we-
seen that happen in
we've
the
been through
past
too
and it's
much.
bad.
I wouldn't want to do that.
No, we've been
I'm
through too
telling
much
you.
to do that.
It's like a lock. A lock's only to keep honest people honest.
Exactly. I hear you. Okay, so no action on number 17. Consider and take action if necessary regarding annual review of Gainesville Hospital District contract.
It was actually a request by me. Okay, so I just want y'all to be aware. So if you'll turn to tab 18, I've created you a spreadsheet. You're going to have a one-page list of the contracts that were not assumed with the lease agreement. So this is going to tell you who the vendor is. I've listed their scope of services, so what they're providing for the district. I've given you a start date of their contract. Some of them have set end dates. Some of them are open, day to day, month to month, just depends on what auto renewal clause they have or what notice of cancellation clause they have. And then I've got some notes out to the side for things that are a little bit more detailed. We can review these on a one-by-one basis. We can create a committee. I just want y'all to be aware of what you have, what's coming up. That's the discussion of how do you want to handle the approval and renewal of your contracts.
Christie, really, once you got this to us, and I thought it was a big list, but it's really not that big. Once you go through it, them just going down from the top, obviously the CHC stuff stays, that's what we just did. The appraisal districts, we're gonna keep it, I'm assuming. We got tax abatement, corporate coalition apartments, Firestorm is Tony doing our videos, we're still gonna keep that. The First Southwest, we didn't know who that was. Do you guys remember, Robbie?
First Southwest.
It has to do with bonds, but we're assuming we don't use them anymore.
Yeah.
They were on
So First Southwest is Hilltop.
It's Hilltop
yeah.
now.
They are Hilltop now?
Yeah.
Okay.
Okay.
Looks like that expires.
And then-
We're,
First-
hey, Kevin, aren't we pretty much done now with Hilltop, aren't we?
Yeah, and
Yeah,
they're about to
I think you're
expire.
done. I mean, my guess is you're not paying Chris anything now. I would think the only thing you would do would be if you had some other bond issue, or you could hire him at the time if you needed to consult with him.
Yeah, okay.
His contract
First
expires.
state,
It does, good.
first state we already talked about.
What's an automatic clearinghouse?
That's ACH transfer, that's where you transfer money between accounts. It's not a wire, but it's similar. So that's the stuff we're fixing to go out for proposal for. The GHC stuff obviously stays. Then we got tax abatement. Hagen Law Group is the HR attorney y'all just use, which we don't need him anymore, but he was just a on-call guy. Paul Render is the guy that did our lease. They're gonna, obviously, just when we use them. Nascoga lease, which we'll talk about in a minute. Norton Rose Fulbright, we probably won't use much anymore now that the bankruptcy's done, right?
See, now we're showing Hilltop down here where it used to be Firestorm. Correct?
First Southwest,
Yeah,
they're
and
the same thing.
That actually ended in December 2.
What is this, Olivia,
Holly?
Holly, what is that?
She's
She's a
a nurse
leaser.
practitioner.
Oh,
Lake
Lisa
Howard.
that spot.
Howard.
the same on the bottom, Benjamin Hill? too?
Yes, Lake
Yeah.
Howard.
I don't know where the regional health partnership is.
Who's that other lease?
What's the 1115 waiver?
That's
Christie,
over.
you know?
7:15.
That's your district, that's your IGT.
Oh, that's right.
That's your IGT.
Christie, don't we have somebody out there, Namascota,
At Muskogee, you have Holly Olivera and then Benjamin Hill.
And the lease
are they
is, Muskogee is there.
They're listed on
Muskogee is there. See it, the lease on Muskogee?
They're listed.
Namascota. Yes,
Namascota.
out at Lake Howard.
Right.
Correct.
No, I was asking who's with them, and
Oh.
Yeah,
are
they're
they,
separate, yeah.
are they listed?
Olivera under the O's, and then Benjamin Hill, who's the very last one.
Oliver. Okay.
Oliver Hill and Muskogee.
And
That's
Robertson's
three
the
out
only
there.
other one.
Okay.
Yeah, Robertson's the only other one, and Christie says they do a pretty good job. So
Yep.
really, there's not, once you kind of get down there's really not that much on there.
Is Jim Robertson taking care of delinquent taxes? Is that what he's there?
Yes, sir.
Tim Robinson.
Okay.
So you were asking that when these things come up for renewal, asking if you need to bring them before the board to be renewed.
Correct. Is that
Since
how
you
y'all
only
want them on an individual
We're meeting 6
basis?
times
Correct.
a year, so we're gonna have some that come up in between meetings. That Somebody's gonna have to decide whether they need to be renewed or not, or they're gonna be delayed. So I would recommend that the executive committee.
Determine if they need to be renewed or not.
Yeah, make that, just call, you three guys, make that determination.
It'd be a
That's
reason
fine, there's
for
really
not
not- there's-
continuing them.
There's really not much on here, so it's
No.
fine. I don't know what, I think we really have an action, but
It's necessary regarding annual review. I don't know if there's really any action to take on that. Would all agree that there's no action to take on that one?
Kevin, do you want us to state it in an action?
Kevin, do you want us to state that?
Yeah, I think you could, it might help just to say that you acknowledge that you, and actually you don't have to take any action, but just have the minutes acknowledge that you've completed an annual review of the contracts because you've done it now.
Okay. Okay.
Let Christie take one, so
Okay.
they don't need to be on there.
Okay, and the last one on our open meeting is consider and take action to offer certain property not covered under the lease agreement with Gainesville Community Hospital for sale in accordance with Chapter 272 Local Government Code. There's some interest, I guess, in, or at least, I don't know if it's interest or discussion anyway, of possibly selling the, who's got that? Who's selling the Lake Kiowa property?
Or any of your properties.
Or
If you'll
any of
turn
the-
to-
Or any of
If
them.
you'll turn to
Yeah, any of
tab
the
19, I created y'all a sheet with your operating expenses and income for each location.
Christie, will you refresh everybody's mind, each one of these properties?
I will. First one listed is 1501 West Highway 82. It is the house at the end of the hospital drive. 100 West Kiowa Drive, of course, that's our Lake Kiowa Medical Arts Building. It has 3 tenants. 817 North Grand Avenue is a standing building that is beside the Rural Health Clinic on 801. So it needs some demolition. 818 North Morris and 822 North Morris
Vacant lots.
are open lots on the back side of a rural health clinic for a possible expansion in the future.
That's more property.
That's,
This is, all the other remaining property is tied up in your lease agreement with the Gainesville Community
All this
Hospital.
leading up the right way from 82 on the right and
Except
left
the
side.
house, except the house.
Except the house, except for the house at the end of the
So
drive,
it's tied up with,
the lease. Yes, sir.
But Christie, on that house, how much were we getting for rent on that house?
We were currently getting $550 a month when it
Was
was
it?
being leased.
oh,
It says it need to be repaired, is it?
it's, it is, it is not inhabitable.
Not in-
not.
then the
yeah.
question is, why are we still paying gas, water, and sewer?
Yeah, I was looking at that.
Lake Kiowa.
No,
No, it's got on Highway 82.
on 82.
Oh.
Yeah, you gotta pay.
That is for the year, so they just, let's see, I'm trying to think. Okay. October, November, December. So it was just a year this December. So she gave you the last year's worth of expenses. So the prior year, in December of 2017 is when they were no longer in that property.
We
So
showed
we're still paying.
These fees are for the last year.
Yes.
Annual,
$300 for the
annual,
whole.
For the last year.
For the last
Okay,
year.
so it's not
Annual
going on
operating.
anymore.
not going
We're
on
not paying
anymore.
today.
Correct.
Okay. Then,
Correct.
Go to the
So, well, since we're on that with Ken, just, obviously, it's not gonna be much of, or not any expense other than maybe we have to get it mowed. But, there is a little liability sitting there with a house. I think, if I'm not mistaken, I heard somebody was interested in trying to salvage that, i.e. haul it off.
Hey, Kevin, do we have to, I know that the house down there is worth nothing. There is someone that would take it for salvage, but do we have to go out for bids on that because it's public property?
Not if they're gonna just haul off the house. If you're gonna sell anything like real estate,
Yeah.
you have to follow the public bidding statute, and so it has to be posted for bid to sell public land.
But just to salvage the house, it's not?
Yeah, no, if you're just gonna sell the house and have somebody haul it off, you don't need to bid that.
I'd like to see sell the lot as is.
It sure ties to our property, and I found an entrance, I could see one day a doctor's office.
Yeah.
What would be
Yeah.
wrong?
It's right on the square of the property. I think that's why they picked it up. It's-
I think we would like to keep control of that and determine what goes there.
It'd be
The
a
house
nice
is
to see
gonna
them
sit
right
there
there.
and become an
Yeah,
eyesore.
can I just make a comment about that? I mean,
Sure.
it is important, I think, to control your entrance if that's where that house is. Because, for example, you wouldn't want to sell it, and I'm just going to give you an example. You wouldn't want to sell it and have it turn into a tattoo parlor. I mean, there's nothing wrong with a tattoo parlor, but that's not exactly the thing that you want at your entrance.
Probably not a bad idea.
I'll give another
So-
one. You wouldn't want to sell it and it turned into an urgent care center at the end of our
There you
driveway.
go.
Well, what's wrong with that being another person?
Guys,
Nothing if it's
Yeah.
ours,
Yeah.
or if it's the hospitals.
Well, you know,
Yeah,
that's
the
what this country's going to. You know, rural hospitals is going by the wayside because of those care centers and
So-
everything's taking over.
I would like to see us get the house hauled off, and let's just sit on the dirt. It won't cost us anything to sit on the dirt other than
Yeah, we can do
mow
it
it.
whatever we want anytime.
Right.
Well,
All right, I'm
okay.
sorry, go to the next one.
The other one's Lake Kiowa.
It looks like over the last year, you netted 41,000. I'm not sure if we've got that.
109,000.
What's that?
It's listed on the appraisal district for 109,000.
That Kiowa is?
No, I'm talking about.
Oh, the house, yeah, it's not worth it. You should go in it.
It may not be, but the property's definitely worth.
Well, the land, that's why we probably, we can always do something later with the land, but shouldn't be too hasty to get rid of that land if we, it's not gonna cost us anything to keep the land.
Digress.
But the house could be a liability for us if somebody gets in there. You know, hurts
Maybe
themselves.
somebody living there now.
Huh?
I think with this ranch, it needs to be moved at somebody else's expense,
I
and
agree.
not ours, or tore down at somebody else's expense.
I agree.
I'm willing to sell it, but I'm not willing to clean it off.
If y'all are good, the committee could try to find
Yeah.
somebody
Well,
interested in
we
hauling
all-
that off, if y'all are all good with it.
Yeah, we know there's someone that will take it for just the salvage. They won't pay anything for it, they'll take it for the salvage and,
Pyramid, old pyramid.
What are you gonna do with the
Moving
concrete
pretty
slab?
easy.
you know, maybe we can get them to
It's only
take
a
that.
footing.
Oh, it isn't a concrete slab.
just a footing
It's
right
pure
now.
beam.
Pyramid, pyramid?
Mhm.
They'll probably take it all with them.
Yeah. Yeah. it is.
Shane, you said you heard somebody was interested, now you got somebody lined up?
No, yeah, I don't
I-
remember where that came from, but somebody said at one time they would take the house and move it.
It's
Do you remember?
Shane, with the director of the facilities here, he knows somebody
Shane
who
Greer?
would take it for salvage.
Shane Greer.
Shane Greer. He knows somebody that would take it once. And
Clean a lot of.
Is anybody here against that?
I'm not.
Y'all getting rid of it. but-
Shane may not know anybody since his
Oh, yeah, I
since his
talked to
boy
him.
bought Ken's house.
I talked, what?
You think it costs money to
Okay.
get rid of the foundation? It costs,
So-
cost me $3,000. for each
We
backhoe.
we can make that happen if ever one of the board wants to get rid of that.
I really
We don't
haven't
have to go
looked
out
at the
for bids,
condition of
Kevin,
the
right?
house. I don't
Just
know
to get
what it
rid of
is.
for
Right.
salvage.
Right.
But how about Kiowa? What's your guys' thoughts on Kiowa?
You know, Kiowa needs to be put up for sale. It's a liability now. And,
Ken, it is making you 41,000 a year, just so you know. Now, I don't know what the roof condition is. I know none of us.
It's not in good
steadily
shape.
going down the hill, and it's gonna keep on.
Well, that's one of the things I.
The roof just got patched a year or two ago.
We're making 41, but in these expenses, it doesn't have anything to do with, maintenance or a roof that might happen or something else, because you could eat through that 41 pretty quick, but,
What's it appraised at, Ken? You got that list?
and again, 41 is a year, adds up.
At one time, they had somebody wanting to buy it.
There's been an offer of as high as 385 and another one at 415. The last two times they listed it, and neither one of them were accepted.
The last bid we got from Rod Tyler, he gave us a $60,000 bid.
I did a little just filling out there of interest in, and there's interest in that building.
I'm sure.
If anything, that'll bring in 41 is going. Christie, is our insurance inside this associated fees?
No,
It's,
that association fees are just because it's one Lake Kiowa.
so that's association
Those are
fees, not
association
associated.
I got
Insurance costs.
They got
So-
Kiowa on the road for 491,000, almost 400.
That's what I was thinking, about $500,000.
Do we not have that captured on this, just our insurance?
If you can sell it for somewhere close to $500,000, you're better off getting that money and forgetting that
So this is,
41,000.
that's expenses plus we have an insurance.
Plus our insurance.
Jimmy, what'd you say?
I said, if you can get somewhere close to $500,000, which is what it's on tax roll for, if you get somewhere close to $500,000, you're way better off that $500,000 you are that 41,000. That 41,000 ain't nothing compared to
I went in on
$500,000.
we've listed it twice. Muskogee wanted it, and they gave us a really nice, in my opinion, nice bid.
I think that would be worth the
Was
400.
it
About
400?
400. So we turned it down because we thought it was.
I got another question. Why don't we pay association fees? That's not even sitting on the Kiowa property.
Yeah, it's part of their community.
But part of their community. Don't give me that.
Goes outside the gate.
Outside.
It's outside the gate.
Yeah, but it is.
It's kind of like our entrance, they kept their entrance too.
Who gets to use that association fees? Andy, you been down there?
Actually, when I was
No,
CEO
not
here,
even
I
the
got
people
to
that
go
rent
in.
it.
I got the the permit to go in when I was CEO here.
Or you-
Hey, I used
Hey,
to,
Andy, you still?
No, I don't.
Have you
I
been
think Holly
collecting on
gets
that
it.
ever since?
I think Holly gets it, I don't know who gets it, I don't.
What about we put it out for bid, see what it brings? We don't
There you
have to
go.
accept it.
Yeah.
Don't cost nothing, put it out for
You
bid.
know, you don't have to take it. If you don't like it, turn it
Thoughts on
down.
that?
Hey, Kevin,
Yeah,
what's the,
you don't have to accept a bid, you can, but one of the things I would suggest that you do is that you put a minimum bid on it, so you don't get people who are bidding $10,000 or $20,000. So if as Jimmy says that you want to try to get about $500,000, then I'd put a $400,000 minimum bid on it, and
There
that
you
way you
go.
only get serious bids, but you can still turn down anything you want to.
Okay.
Well, even a little less than that would be better than 41,000. Normally, if you have a rental property and it'll pay for itself, including expenses in 10 years, that's kind of how it figures out. So really, you're looking, if you get 300,000, would be better than 41,000 a year.
Okay, let's put that in a motion.
hey, real quick, Kevin, what's the, do you have to, being public property, do you have to have a realtor list this, or is it a bid
Well,
situation?
you put it out, seal bids in the paper.
And then what's the
internet,
time
whatever.
This is this is really quirky, but you don't have to have a realtor. It has to be, and I can get you the exact, but it has to be published in a newspaper, I think, twice for so many days. And it has to be a newspaper of general circulation, so you can publish it in the local paper, we can write up the bid requirement. And then you take them, they have to be due by a certain date. Now, what some people do is go out and get a realtor just to try to generate interest in the property. But all the realtor is doing is trying to get people to bid. So it puts the realtor in kind of an odd circumstance.
So is it really a bid, or is it a seal proposal deal? I mean, it's not
Well,
a,
I guess I would say it's probably a seal, they call it a bid, but I guess it's more of a seal proposal.
but you don't have two guys going back and forth with offers.
No,
No, in fact, you can't do that.
You bring them to the board, whatever offers you have.
Yeah.
Well,
Seal bids.
the last time this was appraised was in 2014, so that's 5 years, so it's probably going up in value.
That's right.
We actually just had a fair market value study done on it last year.
How much?
I can't answer that without looking at the
North of
records.
400?
But we did that because we have to have that done every so years because we are leasing it. And so since we do it based on triple net, we have to have that study done.
I myself would say, and I put it in a motion to put it out for sealed bids with a minimum bid of 350,000. All bids can be rejected.
I'd like to see just a little higher on the minimum.
We can always reject it, Shane. Really, at 350,000, if you get that, that's better than 41,000, in my opinion.
Yeah, I'm not.
I'd say minimum bid 350,000. All bids rejected
If they go
can
back
be
and look what
rejected.
it's valued at, 2014, 491.
Okay, so let's put that in a motion. Jimmy just made a motion. And a motion to put the Lake Kiowa property out for sealed bids, minimum bid of 350,000.
All bids can be
And
rejected.
can we add a second on to that is to, approve, how would we put that, Kevin, of just removing the house? Removing the
Well,
house, or a separate one, or just a?
Separate motion if you want to do that.
I think I did a separate motion,
Okay,
Jimmy's right.
all right.
And on the house, I think I'd just say to authorize the sale of the house for nominal value in return for its removal.
And
But
clean
we're
up.
not bidding that, we're just getting it and putting that out in a requirement that well, you said we don't have to bid it, but we're just gonna get it.
Yeah, you're just-
removed.
You're just authorizing it. I mean, if somebody wants to be the person kind of in charge of that, I mean, if Shane or Jeff, one of you said you know somebody, I mean, so authorize, for example, if Shane's gonna do it, authorize Shane to make an arrangement that,
I'll do it. All right, we can do the executive committee, that way there's several of us that we can get together, okay?
Removal and cleanup,
Removal and cleanup.
minus trees.
Yeah, make sure it
Okay,
gets cleaned up.
so let's go back to our first bid, bid of the Kiowa to be, you got that down?
Bid out
I'll
at
restate it if you want.
$350,000 minimum bid.
There you go.
I got it.
I make a motion to put it out for bids with a minimum bid of 350,000. All bids can be rejected.
Okay.
Or any and all bids can be rejected.
Do we have a second on that?
I'll second.
Okay. Okay. Any further discussion on that? All in favor of putting that building out for bid, say aye. And opposed? Okay. And then, how about a nomination or a motion to authorize the salvage of that house on the end of the hospital property for nominal figure.
Along with cleanup.
Along with cleanup.
It needs to say clean up, but
And
trees stay.
Cleanup and, okay, do I have a motion for that?
I'll make that motion.
Okay, Shane.
I'll second Shane.
Kenton. Further discussion? All in favor, say aye.
Aye.
Okay, opposed, same sign? Good. Hey, function like a board.
Hey, the only other thing, while we were on that, does that close out that whole deal? I was just gonna say, that house, something else for the executive committee, was there something with asbestos on the one over behind the roll top?
Dr. Rhea, next door.
Yes, the top roof.
The city has a program where they're taking, I won't say eyesores, they're creating green space, I think. They're intent.
Residential housing, not
Yeah.
being commercial.
They're not touching any of that.
Yeah, we've contacted them
You
for
did?
helping them removal, but because of the asbestos, then
They're
they
not
turned
gonna
us
mess with
down, correct. But they did help with the two houses that were on 817 and 822 North Morris, so that's a clean lot now.
So we're gonna be stuck with that building until.
We decided to expand.
Okay, that's all.
So we're now through, we're going into closed session, pursuant to Texas Government Code 551.071. We'll meet to consult with attorney either in person or by telephone, discuss ongoing investigation, which require confidential discussion with attorney. And coming out of this closed session, Jack, and there's nothing to take action for except to adjourn. Do I have a motion to adjourn?
Don't nobody make that
Second.
motion, let's hang around a
Shane,
while.
Robbie.
And Robbie, okay. All in favor, say aye. Aye. Go home. Okay. You're gonna be calling. You guys.